Hey everyone, welcome back to Chipstock Investor. Happy Friday. As you can tell, Nick drug his Flamingo Friday shirt out of the back of the closet.
It's been a couple of years doing Flamingo Friday. Thanks for putting up with it once in a while, which brings us to an important point before we begin our discussion on Monolithic Power Systems, or MPS, and the Chipstock Investor Power Chip portfolio, the basket of companies that we are betting on in the power chip market.
By the time this video is published, we should be at 100,000 subscribers. And we've had the channel for 2 years, and that's a really awesome milestone that you've all helped us reach. Thank you for hitting that subscribe button and watching our videos. It means a lot to us.
Yeah, we really appreciate it. As Kasey said, we wouldn't have been able to do it without you. We are blown away at how many of you like to watch these research videos that we do. Super awesome, super cool for us. Thank you, thank you, thank you.
And now, if you haven't hit the subscribe button, do it now. Let's talk about Monolithic Power. There's a few things that we're going to cover today in this episode about Monolithic Power. The first is we're going to do an update. If you haven't seen the previous video that we did on this, we'll link it here in the video and in the description below. Check that out, but we'll cover some updated discussion. After watching that video, come back here for the updates. Second thing we'll talk about is power chips and analog chips in general, how the demand has bottomed. What does that mean for a company like Monolithic Power? And we'll discuss our power chip portfolio and update you on what we've done this year so far.
Speaking of our basket of power chip stocks, when you buy a stock, what you're actually doing is getting ownership of a real world business. That's pretty cool. If you like collecting ownership of awesome businesses,
check out the link below to get access to Moomoo. Moomoo will give you 15 free stocks to sign up and fund your account. Get started trading today with Moomoo.
Maybe your newly funded Moomoo account, which maybe you get a boost with those 15 free stocks. Maybe you use that to take a look at this company, MPS, Monolithic Power Systems. Okay, so here's where we're at with end market demand for semiconductors. AI infrastructure, accelerated computing. You already know all about that story from NVIDIA. Consumer and cloud and enterprise computing. Cloud and enterprise, that's more traditional, let's call it non-accelerated computing demand. At the beginning of a new growth cycle, it appears auto industrial chips are also showing early signs of bottoming out. However, power chips, interestingly enough, go into all of these markets. Now, we might typically lump them into auto and industrial, but really a power chip, which is a type of analog chip that regulates and manages the electrical current needed to power all chips, all semiconductors, go into all parts of an electronic and computing system. And this is the market that Monolithic Power Systems participates in. How in the world have they been able to pull this off? 70% increase in the last 12 months, which really just builds on a very long-term run of outperformance against some of their peers, like on Semiconductor and Texas Instruments. You can see Monolithic Power, MPWR, huge outperformance there in blue.
You may be wondering how a business like a power chip company could be up 70%, especially when we would traditionally lump this business into that auto and industrial segment of the market. However, it has a lot to do with the business model for Monolithic Power. MPS is a fabless chip designer, actually one of the only fabless chip designers for the power chip segment. Monolithic designs the power chips, then provides those designs to the chip fabs, which then send those fabricated chips to the tech equipment and device companies.
Now, this is a pretty crowded space. There are a lot of companies that provide power circuitry, the chips that actually manage the flow of electricity. This is not an exhaustive list, but some of the competitors, MPS itself explains in its annual report, include Analog Devices, Infineon, On Semiconductor, NXP, Texas Instruments. We're going to circle back to this at the very end of this episode and tell you which of the power chip companies we're invested in if you haven't seen our portfolio yet. So keep this in mind. This is a very crowded space, and the business model for MPS, that fabless design model that Kasey just showed you with our semi-industry flowchart, is an important factor in the company's outperformance over the long term.
Monolithic focuses on primarily three targeted areas in the power segment of the market: systems architecture, circuit design and implementation, and process technologies. You can sum this up by saying that they're trying to make more power efficient chips to regulate the flow of power to the semiconductor or the circuit board or the server, which we'll discuss later.
And specifically, which each of these segments mean. Systems architecture, it's not just the chip design, it's the whole electronic system that they are increasingly getting into designing. And then, of course, the circuit design, that is the chip itself. That's where MPS started, just designing the monolithic die that combines multiple functions of power management onto just one single compact chip. And then process technologies, they actually work with their fab partners on developing the actual manufacturing process. So the fab ultimately is the one that has to make the investment in the equipment to ultimately make MPS power chips. But MPS has this very large, extensive portfolio of IP spanning everything from system to manufacturing process. So this slide shows MPS versus its competitors. What this is illustrating is an MPS power chip design or system takes up less space on the circuit board than its competitors, all while driving more energy efficiency.
That's needed because in the most complex semiconductors, for instance, the GPU and the HBM memory take up most of that space on the circuit board. So you need smaller power die.
Yeah. So if you're a potential monolithic power customer and MPS comes to you with a very, very small footprint chip that can help regulate the power of these different parts of your system, that's a really, really compelling use case versus another power chip provider that maybe takes up more space or maybe requires multiple power die to make up the power management module.
A good illustration for this may be a internal combustion engine. If you think about just 50 years ago, how big an engine block was needed to create the same amount of power as what you see in a very small engine block today.
So we showed you a picture of what that looked like for an accelerated computing system from someone like AMD or NVIDIA, but this is the compelling proposition across all sorts of industries: automotive, industrial equipment, communications infrastructure like 5G base stations that consume a massive amount of power, consumer electronics. MPS has a power chip system for nearly everything. And this is really important because if you think about maybe just your device that you're using to watch this video, maybe it's your tablet or your smartphone, there's a lot of chips in there. You have a chip that's connecting you to the internet and taking that data signal, that wireless data signal, and converting it into something like a video on your screen. There's a power chip for that, regulating how much power for the modem, for the wireless chip, for the screen, how much power the screen is going to consume, the CPU in there. If you have too little power, your device doesn't work properly. If you have too much power, the chip fries. You need a power regulator for every part and piece in your device. That's why these companies like MPS have thousands of products for their customers.
Now let's shift our focus to what's driving MPS's growth these past 6 to 12 months. Enterprise data, far and away the leading growth driver. From 2019 to 2023, the CAGR is over 61%. As far as the serviceable addressable market for MPS, you can see automotive is the largest, but cloud computing, which includes things like data center, NVIDIA, and the like, is very quickly catching up and could definitely reach the same level of SAM as automotive.
Now, the company has been outperforming throughout the bear market, and it is that enterprise data segment that is propelling that outperformance. This is a chart from MPS of their revenue growth and the estimated full year revenue for 2024. You can see the estimate up about 100 million from where it was just 3 months ago to close to 2.2 billion now is the full year expectation. Significant growth over last year. And this outperformance is really important thanks to the data center segment. MPS has basically a new market on its hands. that a lot of its competitors don't have. We're going to circle back to this at the very end and explain why this is now part of our power chip basket of stocks.
You can see that there has been some cyclicality, but overall, earnings per share growing faster than revenue. And as the company matures, we expect that to continue. Let's take a little bit closer look at that enterprise data. That's what's been driving growth for Monolithic. Enterprise data revenue up 290% year over year in Q2 2024. And you can see everything else has declined significantly, but total revenue is still up 10% quarter over quarter and 15% year over year. Enterprise data definitely driving that significant growth. You can imagine if all of these other revenue streams for Monolithic, storage, computing, automotive, if everything just stabilizes, we're going to see some pretty rapid growth for Monolithic.
Interesting development here, because that's exactly what management has indicated is happening. The rest of those end markets certainly not growing, nowhere near to what the enterprise data segment is, but they are stabilizing. And it appears that is going to begin contributing to the overall growth story. So this is the Q3 outlook at the midpoint. 600 million in sales. So that sequential growth rate was 10% last quarter. It's now expected to be 18%. Quarter over quarter growth based on management's guidance. GAAP earnings per share, $3.61. Again, at the midpoint, that implies a 75% sequential increase and a 42% year over year increase. That's pretty good stuff, because this is a premium priced stock when you look at it on a trailing 12-month basis. 3 months ago, when we covered this company, we explained how, because of the cyclicality inherent in this business, when things really start to heat up again, growth rates, GAAP earnings per share growth rates can become quite dramatic. In some one-off quarters, more than triple-digit year-over-year increases in earnings per share. We might be on the cusp of that happening. If we zoom in on this chart just a little bit closer, just the last few years, this cycle has been long, drawn out, especially tough for the power chip market. But you can see things starting to turn up for MPS. And that's what the Q3 outlook is implying, a very, very fast return to profitability on the way for MPS.
Let's look at a fair value estimate for MPS based on the current share price of $895. So this is one scenario that could be the case. Earnings per share GAAP estimate of around $10 for the current year, 2024. Earnings per share growth of 40% for 2 years through 2027, an 8% terminal growth rate thereafter, and a 10% discount rate brings us to the fair value of around $900. Do you think this is reasonable?
It's not an unreasonable expectation. Maybe we should say that. The bar has been progressively getting raised in the last few quarters as that enterprise data segment has ratcheted up, almost quadrupling in the most recent quarter year over year. Of course, the market is going to take notice of this, especially when you have this anticipation of NVIDIA Blackwell, AMD's MI300X accelerators putting up some impressive growth numbers in 2025. MPS, it seems, is catching that tailwind as they provide some of the power chips for these systems. Unfortunately, it's an expensive stock. If you're looking for a deal, this isn't it. However, it's probably not as expensive as it appears on a trailing 12-month basis, because as we showed you in the previous charts, when earnings start to heat up again, we can have some quarters of really, really dramatic year-over-year increases, perhaps upwards of 100% year-over-year increases. And that's going to, some extent anyways, take care of that egregious looking valuation. So I would say not an unreasonable hurdle in this particular scenario we have outlined. Bear in mind, this is another one of those momentum plays.
You may recall this chart we've shown you a few times when talking about another power chip company that is in our basket of power chip stocks on semiconductor. But this is the shape of the auto industrial chip revenue recovery. And what's happening with most of the companies is what you see on the bottom. But what we want is what's going on at the top, a nice rapid growth to the right. And that's what Monolithic Power is currently doing. Some other companies are kind of stuck towards the bottom where it's just a more gradual incline.
And so that's why we've updated our power chip stock basket. And by extension, let's just call this the auto and industrial semiconductor basket. Microchip, they provide a lot of stuff, embedded process chips, FPGAs, microcontrollers. onsemi, also a power chip company, one of the leaders in silicon carbide, and then two of the manufacturing equipment providers that play in this space, Axcelis and Air Test Systems. They're all undergoing what Kasey just explained in this chart, the bottom scenario, where things are stabilizing, but revenue is not recovering as quickly as everybody would like. Monolithic Power, on the other hand, getting that very, very rapid recovery, has already returned to overall growth because of the outsized exposure that they have built purposefully addressing the data center and enterprise computing segment. So we went ahead a few months ago. We said that we were going to be taking a starter position in MPS, ticker symbol MPWR. And so this is now our updated power chip basket.
Nick, I know you've been covering MPS for a number of years, and we have only just taken a position in the stock. Why is that?
I sense some irritation. Yeah, that's an excellent question, and there's no good answer. We've liked this company for a long time, and perhaps I'll just say I've talked myself out of ever making a purchase and maybe got some help along the way, talking myself out of buying it because of valuation on a trailing 12-month basis. It's always looked expensive, and honestly, it's just old habits dying hard. Trailing 12-month valuation metrics are absolute crap. There was no good reason for not owning this all along. We're fixing that. It's part of the basket. Okay, are you happy?
It's okay. Don't frighten in front of the kids. We'll stay together. Don't worry, guys. Chip stock investor will live on. I'm going to let this one slide. Make sure you check out our sponsor of today's video, Moomoo. Link in the description below gets you 15 free stocks. And thank you again very much, all of you subscribers and viewers out there. We really appreciate all the support you've given us these last 2 years.
We have enjoyed this very early part of our journey so far. We can't say enough how much we appreciate the support, especially early on when the video quality was terrible. We hope it's getting better. We definitely think it's a lot better. Thanks, Stassi, for that. We're now a team of 3, so we hope that you'll stick with us. And if you do, thank you so much. It's really awesome. It means a lot to us. We think it's really, really cool.
See you all again soon at Chip Stock Investor.